Hi, I'm Asif Farouk and this is Finextra at Cybos. We're here today with Chris Zingo of Fundtech. Thank you for joining us. So my first question is, many banks seem to have organised their transaction banking business quite recently. What kind of challenges does this present?
Well, that's a great question. I think before answering the challenges, I think we should understand why that change is happening. I mean, in a recent industry research report, 43% of transaction banks have dramatically changed, whether their strategy or infrastructure. And that's up from 23% the year before. So there are two core elements driving that change. One is regulation, obviously. Obviously they have to comply with certain regulations around the globe. Regulation is getting the priority because they have to do it and there's a direct timeline. The second element is really changes that they're seeing in their customer demand in their corporate. So on the regulation side, I think most institutions look at regulation as a constraint against their ability to invest in strategy. Right? I'll use a Basel III term, it's portfolio invariant, written for the masses. Strategy is very specific to your personal business, where you sit, where you think your competitive differentiation, and where do you want to invest. But I think what we've been seeing is many are now looking at how can I leverage that tactical investment for regulation, and how can I scale so that I'm not wasting a tactical investment to comply with regulation that I can't leverage on and on. On the customer demand side, it's pretty interesting. The last 15 years, their corporate customers have been really focused around full enterprise automation and integration in the form of ERPs. What we're seeing now is demand for host-to-host connectivity and better ways of communicating with their customers. And the principal driver is end-to-end visibility in cash. Because to manage working capital efficiency, they have to know what their cash positions are at all time, and they have to be able to do something with that cash. So that they can optimize the way they fund various business operations, and also if they have excess cash, invest and optimize the return they get on the investment. So many banks are kind of reinventing their solution capabilities to their clients to try to help them with some of these things. The other side of that is the core payment business has seen some price compression, and many of the banks are looking at expanding capability to their corporate customers as a fee-generating opportunity.
So regulation's always been a very big talking point in this industry. What do you think are the ones that are causing the most pain points?
Well, great question. Again, depending on where you are in the world. I mean, in Europe, obviously SEPA. If you read the regs, you see taglines like SEPA, the beginning of the end, or the end of the beginning. I think what that refers to is, anytime there's regulation and there are cost constraints, you look for tactical solutions for compliance. What the market is seeing is there's a wave of kind of first round of compliance around SEPA, where a majority of the market has some basic SEPA solution in place. But if you look at the volumes, much of that is really around simple credit transfers. So the functionality required to support direct debit and the limitations in some of the infrastructures are now requiring a second wave of investment to be able to expand the capabilities to fully comply. So I think the market's learning from some of those situations. Now they're saying, instead of just tactically complying, let's look at a desired end state. Let's find a path to that value, and let's identify our priorities along the way. And the first priority just happens to be regulation. But the decisions they're making are more longer term in nature, and they're trying to be more intelligent in how they get there.